Hi there. In this video, we explain how married couples in the UK can legally pass up to £1 million tax-free using HMRC-approved inheritance tax rules.
Last year, HM Revenue and Customs collected a record £7.5 billion in inheritance tax, fueled by ordinary families unknowingly falling into a trap. Hello, I'm your host from My Tax Accountant. Today, we're analyzing the specific strategy married couples can use to pass up to £1 million of wealth to their children completely tax-free in 2026. This chart shows fiscal drag. Property values have climbed steadily since 2009, but the tax-free allowance has remained frozen at £325,000. Everyday homes now far exceed this threshold. Every pound in this widening gap is penalized with a 40% tax rate. Take Arthur and Beatrice. They are a married couple with a family home valued at £600,000 and £350,000 in savings. Together, their total estate is worth £950,000. Their situation shows how the tax net has expanded. Because their estate value sits high above the frozen allowance, Arthur and Beatrice's children face a tax bill of over £120,000 if they fail to plan. Protection begins when the first spouse passes away. If Arthur dies and leaves everything to Beatrice, the entire transfer is exempt from inheritance tax under current spousal rules. This utilizes the first building block of the strategy, the standard nil-rate band. This is the base £325,000 tax-free allowance that every individual in the UK receives. Because Arthur left his entire estate to Beatrice, his personal allowance went unused. HMRC rules allow 100% of Arthur's unused allowance to transfer to Beatrice upon her eventual death. Combining her allowance with Arthur's creates a tax-free pillar of £650,000. Beatrice now applies this £650,000 threshold against her whole estate, but with a valuation of £950,000, the estate still rises high above the tax-free limit. Even after doubling the basic allowance through a spousal transfer, £300,000 remains exposed to the 40% tax rate. For many, the basic allowance is no longer sufficient to protect a modest family home. To address that £300,000 exposure, Beatrice's estate relies on the resident's nil-rate band. Accessing this relief requires meeting a strict primary condition. The estate must include a primary residential property that the deceased lived in at some point. Pure investment properties do not qualify. The second condition is the identity of the beneficiaries. The property must pass to direct descendants, which includes biological children, adopted or stepchildren, or even grandchildren. If the home is left to a sibling, a niece, or a friend, the allowance is lost. If her children inherit the home, Beatrice receives her own residence allowance of £175,000 plus Arthur's unused £175,000 residence allowance. These four stacked allowances reach a total tax-free threshold of exactly £1 million. Beatrice's £950,000 estate now fits entirely within the protective silhouette of the £1 million threshold. The £1 million threshold is the result of four separate allowances working together to shield the family home for the next generation. These benefits are not granted automatically. They operate on a use-it-or-lose-it basis. If executors fail to submit the correct paperwork within 2 years of the second death, the allowances are void. To secure the residence ban, executors must file Form IHT 435. This document requires formal proof that the estate is passing to the deceased children or other direct descendants. Questions 4 and 7 of this form require a formal log of the property details and the exact percentage passing to those descendants. HMRC uses these entries to verify the claim. Simultaneously, executors must file Form IHT 402 to actively claim the standard allowance transferred from the first spouse. Without this specific filing, the threshold remains at the individual level. Even with perfect paperwork, high-value estates face the taper trap. For every £2 an estate is valued over a £2 million threshold, HMRC removes £1 of the residence allowance. For a couple, the entire bonus is erased once the estate reaches £2.7 million. Failing to navigate these filings or breaching the £2 million ceiling can turn a protected estate back into a massive tax liability. In our case study, Beatrice's children avoided these hurdles. By filing the correct forms, they stacked the available allowances and inherited the full £950,000 estate with a tax bill of £0. Securing this outcome requires 3 specific criteria: marriage or a civil partnership, the inclusion of a primary residence, and the transfer of that home to direct descendants. This video is for educational purposes only and does not constitute legal or financial advice. Tax legislation is subject to change, and you should seek professional guidance tailored to your specific situation. You do not have to be a victim of frozen thresholds. Proactive planning ensures that a lifetime of hard work goes to your loved ones and not to the tax office. To build a strategy for your family's estate, contact my tax accountant at 020-857-8531 or email info@mytaxaccountant.co.uk. For more strategies like this video